بالله من الشيطان الرجيم بسم الله الرحمن الرحيم. Uh, Sorry for this. Uh, Dear students, brothers, sisters, elders, Assalamu alaikum wa rahmatullahi wa barakatuh. Before I proceed to teach you the balance sheet, I will tell you regarding my next video. My next video will be how to prepare a companies or a firms or an organization's a financial report or cash book. This is very, very, very important, and you have to learn this. If you learn this, you will be able to work at any organization. On the base of this cash book, we prepare different types of reports, financial reports. Okay, let's go to the. So they said there I have described all elements of the cash book. So let's go to our basic topic, which is how to prepare the balance sheet. This is the balance sheet. Before explaining the amounts, how did I enter on left side, which amounts are going to be entered on right side, which amounts are going to be entered. I would like to explain and define the balance sheet. So before defining balance sheet, in balance sheet we have two parts, which are owns. Number one, owns. Number two, owes. What is distinguish or difference between owns and owes? Owns means that those parts, those instruments, those things which are assets in the shape of current asset and non-current asset that the owner of business has owned. That's his own property. That's his own ownership. Anything that he has, for example, if he has factory, machineries, different types of, let us say, technologies, computers, desktops, laptops, furnitures, lands, and so on. These are the or money. They have cash in the shape of cash, in the shape of account receivables, in the shape of goodwills, in the shape of marketable securities. These are called current assets or owns, and non-current assets or machineries, lands, which have more than 1 year life. Those are like land, office, factory, furnitures, computers, machineries, latest technology, and so on. These are called owns. And on the other side, O's, OWES, which is this one. What does it mean? It means all types of those amount of money which you have owed from someone, even from you have owed as a loan from the bank or from a person, from an entity, from a financial firms or organizations, on the base of interest or on the base of zaribat. In Islam, the interest is not allowed. In all Islamic countries, people owe money from the firms, organization, all banks on mazaribat. Mazaribat means the profit and loss should be equally distributed between the owner of business and the person who is owing money or who is providing loan to them or who is crediting money to them. This is the difference between the Islamic system of the owning or lending money or crediting money from a bank, from a person, from an organization, from anybody. And the second one is in owes. the owner's equity. Owner's equity means a person or the owner of business or the owners of business. Owner of business or owners of business have invested money in the business. How much did they invest it? How many person they are? Is this sole proprietorship? Is this a corporation, or is this a partnership on the base of the persons or the base of their investment? They, at the end of specific time of period when the business has given its report, financial report, they will make decision to continue or not continue to the money which has owed from in the shape of liability. Should they continue with those amount, or should they terminate the contract with them, or should pay them interest or not interest? But in our religion, in Islam, interest is not allowed. We do the Muzarabat system, and in Muzarabat system, it means profit and loss is distributed according to the amount that they have loaned. If the loan is on high scale, the percentage of the Muzarabat will be high. If the loan is on small scale, the percentage of Muzarabat, which means profit and loss, will be on small scale. But in the other countries, non-Muslim countries, they have a percentage of the interest that could be from 1% up to 10, 20, 50, and 60, any percentage they are agreed, they're written in their agreement. So that is what I explained to you in balance sheet, what is owns and what are owes. What are owns and what are owes. The difference between owns and owes. Owns, assets, current assets, non-current, owes, liabilities plus owner's equity. So now let's define the balance sheet. Balance sheet educational definition as a balance sheet is a financial statement that shows the financial position of a business at a specific date. What does it mean? It means we have 4 times of the financial reporting, which are monthly base, quarterly base, includes of which are in 3 months, many annual or 6 months financial report, and annual financial report. These 4 are very, very important. But the most important are two, which are 6 months or mini annual report and the annual. On the base of these 2 reports, the owners of the business, if they are in profit, they make decision to continue and invest further. But if they are in loss, they are just terminating their business, and the money which they have owed from in the shape of liability or in the shape of owner's equity on the base of the investment of those persons, they give them back. But the other 2, which are monthly base and quarterly base, in these 2, the owner of business find out their process of development or the process of making loss. If they have made loss, they are going to bring amendment in those products, and if they are not sold, so they're going to terminate those production of those products. Or if they are selling on high scale, they are going to increase the budget for those which are selling on high scale. These are the things or the decisions that the owner of business takes on the base of balance sheet. I hope you may understood what is balance sheet and why do the firms prepare the balance sheet. It's what the business owns, as I told you, assets, current assets, non-current assets, and what owns liabilities, the loan from the bank, from the person, anything, along with the owner's equity, the investment of the owner of business, even that's one person, 2 to 20%, or in the shape of the franchise or dealers. So this is the balance sheet follows the basic accounting equation, which is assets is equal to liabilities plus owner's equity. Remember, this is written on the left side. On the left side, first current assets like this. Current asset, these are current assets, and then non-current assets or fixed assets. Then calculate both of them. Total on the current asset, total the non-current asset as a total of asset. That's on the left side, and on the other side we have liabilities. First, its formula, its rule is to first you write down your liabilities. They could be in the shape of current liabilities and non-current liabilities. Current liabilities are the accounts receivables that they are going to receive from the business or from to someone they have given, especially in the business's use, and the non-current asset is mortgages which they have given to someone on the base of the contract. That could be from 1 year, 1 month up to 30 years, 35 years, maybe 50 years, but depends upon the amount of the money they have loaned. But in mortgages, especially this is used for purchasing a home. If you are going to buy in the United States, or you want to buy a house or a home, we have three types of houses in here. Apartment, which is in the shape of building, townhouse, which are houses next to each other, and single house, which is separately a house. So if you want to buy these on you have to take a loan from the banks as a mortgage and pay them with the passage of maybe 36 months, 40 months, 80 months, or 30 years, 25 years, 1 year, from 1 year to 36 years, depend upon the policy of the bank and also the contract that you have signed with them. So let's go to the practical work and do the practical work. Here it is. As I told you, on the left side, we have assets. Current assets, non-current assets. See, current assets, non-current assets. Current assets which are less than 1 year, non-current assets which are more than a year. Here in current assets we have cash at bank, $100,000. Account receivable, which we have we have to receive this money from those to who we have sold the products or we have provided them services. That's called account receivable, but it's on the base of the contract. Maybe after a week, 1 day, after a week, after a month, after a year, 2 years, 3 years, depend upon the policy of the contract which you have signed with the customers. And the other repair of supplies. Supplies mean which somebody bring you some products and you repair those products for them and have your labor or your cost of labor from them. That's 5,000. And repair of equipment. Equipment means if you have a factory and you call the technicians from outside, or you have in your own factory and you have a contract with them, or you have contracted with somebody to repair your equipment on the base of contract and receive 36,000 from that repair of equipment. So you have contracted with a company to repair their contracts during 1 month, 3 months, 6 months, or annual base. You receive this amount, and the total of current asset is 100,000 plus 20,000, 20,000 plus 5,000, 125,000 plus 36,000 is equal to 161,000. This is the total of your current asset, and here it is finished. You can write nothing else because the financial department has given you this report. And now we will come to the fixed assets. Fixed assets are those which have more than 1 year life, such as land, building, office, factory, furnitures, machinery, softwares, uh, uh, the desktops and laptops, furnitures, and other equipments such as vehicles. The construction company has dumpers, jackhammers, shovels, and so on. These are called equipment, and or and so on. Or you may have a furniture company. For this purpose, you have a hammer, you have a saw, you have many things. These are called equipments. Okay, I can say anything. These are for the repair of those things or for the sales of those things. You have 36,000 and the total 161,000. And the fixed asset land you sold for cash 200,000. Building you sold for cash 350,000, 50,000, and total of fixed asset is 550,000. Now, to have the grand total of here should be written grand total of assets. So that's 550,000, which is total of fixed asset plus total of current asset, which is 161,000, is equal to 711,000. So on the left side, we have done our job and everything is finished. We have calculated the total of current assets and the total of fixed asset, and at the end, the grand total of current and fixed asset, which is called asset. Sorry, total assets, that's 111,000. Now we will come on the right side. Remember, formula for the right side is the priority which should be given to the writing those things, that's liability. And on the second step, owner's equity. In liabilities here, we have two types of liabilities. I have given the example of both current liabilities, which is in the shape of account receivable, which is 151,000, and non-current asset or long-term, non-current liabilities or long-term liabilities, which are mortgages. I have already explained that if you want to buy a home at the United States of America, you have to pay them on monthly base, and these are could be the base of 1 year, 2 year, 10 years, 36 years, 50 years, how many years on the base of your contract. That's called mortgages, and it's long-term liabilities. Total of liabilities is equal to 151,000 plus 10,000 is equal to 161,000. And on the next level, we are going to come to say the owner's equity. What does it mean? The owner of business investment invested some money. Here I have given just only one person who has invested 550,000. But if it's a partnership, they can invest from 2% to 20%. They can invest any amount of money on the base of their investment. We will, at the end of specific time of period, we have our profit and loss sheet and balance sheet. We will provide them their own equity or the capital they have invested in the business. So the owner's equity is 550,000, and the total of liabilities, which are current and non-current or long-term liabilities, 161,000 plus 550,000. That is equal to 711,000. Here, one thing you have to keep in your mind, and here, don't forget that this side should be equal to this side. If both of them are not equal, then it means that you have made a mistake in some where, and you have to adjust your entries. For this purpose, you have to go to the trial balance, check the trial balance. Did you transfer the amounts correctly or not correctly? Debit and credit side, correctly or not correctly? If there is mistake, bring amendment them. Then go to the ledger accounts. If you have made mistake in debit and credit or transferring amount, bring amendment. If there is mistake in the journal entries, bring amendment in your journal entries. Or if I have made mistake in the transaction, bring amendment anywhere. It does not mean you have made mistake in each one of them, but I explain that anywhere you have made a mistake, bring amendment and correct. This side should be equal to this side. That was today's balance sheet. Here I have explained each part of it. I would like to go fastly on this, understanding the balance sheet formula. Dear viewers, here it is formula. Assets, I don't want to read this to you because it takes time. Assets is equal to liabilities plus owner's equity, as I have already given you. This equation formula representation. Assets are always recorded on the left side, which I told you. Liabilities or owner's equity or right on the right side. Recording the left side, on the left side, assets which are of two types, current asset, non-current asset. I have already told you. For example, current asset is we have 161,000. In fixed asset, we have 550,000. Now, by adding both together, total assets is equal to 161,000 plus 550,000 is equal to 711,000. Our left side, or our asset size, current and plus non-current asset is finished, and the total of the current and non-current is 71,000. Always remember the total of the left side assets must be equal to the right side, which I've told you in here. I told you here. Remember, this should be equal to this. If they are not equal, it means that you have made a mistake in severe, and you have to bring amendment. So, ensuring the balance sheet. This balance represents the accuracy and stability of your accounting records. If both sides are equal, balance sheet has been prepared correctly. However, if the two sides, as I told you, if the both sides are equal to each other, it means they are correct. However, if these two sides are not equal, indicates that an error existing somewhere in accounting process. In such a case, you should carefully review, I told you, transactions, ledgers, accounts, and trial balance to identify where the mistake is occurs. I told you while explaining the balance sheet. Once you located the error, the next step is to re-prepare both balance sheets and profit and loss sheets. This is necessary because any mistake in accounts affects both of these financial reports. In other words, if the balance sheet is prepared on the base of incorrect records or correct or if the balance sheet is prepared on the basis of incorrect data, the profit and loss statement will also be incorrect or inaccurate. Therefore, always ensure that all records are correct before finalizing your financial statements. Once you located the error, the next step is to prepare both the balance sheet and the profit and loss sheet statements. This is necessary because any mistake in accounts affect both of these financial reports. In other words, if the balance sheet is prepared on the basis of incorrect data, then the profit and loss statement will be inaccurate or not correct. Therefore, always ensure all records are correct before finalizing your financial statement. That was all which I told you. So the next topic, which in the next video I'm going to teach you, that's cash book. So don't forget to click on bell icon, view, share my videos with your friends, with your relatives, with your colleagues, with your close fellows on different websites such as TikTok, Telegram, Instagram, Facebook, and so on, that I will be able to prepare further good videos for you for your better understanding. If you have any question, so write down those in comments for me, and also subscribe my videos. As much as I have more subscribers, I will be able to prepare further good videos for you. In my program, it is to teach you the hard subjects of PBA, such as basic accounting, cost accounting, financial accounting, statistics, management, And rather than this, I will also teach you QuickBooks, which is necessary for bookkeeping, and I also teach you how to do a bookkeeping, but that will be in my next videos. But for this purpose, I need your help. To help me, click on bell icon, view my videos, share my videos, subscribe my videos, increase my subscribers, that I will be able to provide you further videos. Thank you very much. Have a good day and have a good night for those who are watching at the night. Have a good day for those who are watching in the daytime. Don't forget, click on, again, my request is click on bell icon, view, share, and subscribe my videos. Thank you very much.